Like I said, welcome. These Saturdays are very important. They're allowing us to really hone in on the skill when it comes to trading when the market is not open. So the pressure of getting into a trade right now is not there. You know what I mean? And you're actually able to sit down and see the market exactly truly for what it is. Um, and that's how you really get nice. I mean, so let's go ahead and get right into it. So today we'll be covering two things. Well, there's one main topic that is comprised of two things, which is market structure market structure, which is trends and support and resistance zones. So, first things first, is kind of just before we even get into the charts, right? I want to give you guys this analogy. And I hope this analogy helps when it comes to how you picture the market. So, when you guys think of like a street, a road, I'm not about to draw a whole road because that's way too much, but you have one side of the street that comes this way, and you have another side of the street that comes this way, right? And also in the street, you have things called intersections, right? Where cars may be, cars may be turning across, right? Or you may have cars that were coming this way, but they choose to make a U-turn, right? But this is typically where, you know, cars typically either turn or at an intersection they may keep going, correct? So this is just, how we describe a simple road. Now, that same analogy, it's the same way I want you to look at the market. The market is a road. Now, here's the tricky thing about the road. Imagine I just dropped you in a random country and you see a dirt road that has no markings. There's no markings that shows you what side is the correct way, because as you guys know, in London, you drive on the other side of the street. So if you're in a random state, random country, you don't know what side of the street people drive on, right? When you look at a naked chart, that's pretty much what you're looking at. You're getting dropped in a random country and you don't know what side of the road goes what goes which way. You don't know where the intersections are. You don't know anything, right? So how would you be able to figure out what side of the road do people drive on, right? Where do I turn? By just watching what people are doing. If there was no markings on the road, if there was no stop signs, if there was no lights, the only way you'll be able to see how traffic is moving is by observing the way traffic is moving, right? So that is the same thing in the markets. So we could break down the two components. There's two components to the street, which is what direction are people going, right? Is the right lane going this way or is the right lane going this way, right? That is the trend. That is the trend. That's the trend aspect of trading. You have to know the trend because you have to know what direction the market is flowing in. So you're trading in that correct direction. Now, if I know that, okay, cool, this street on the right hand side, the right hand lane, right? Let's say this is the right hand line and this is the left hand lane. If the right hand lane is going straight, okay, well, where do I turn in? That's our support and resistance levels, right? That is our support and resistance levels. So let's go and get into the markets. And that analogy should help a lot when it just like how you should attack the markets, especially when you wake up, you look at the chart. You don't just be like, okay, I want to buy, I want to make money. No. What direction is the market going in? Okay, I know the direction. Okay, where's a good place to go ahead and enter? And that is the two things that we're gonna attack today, right? Direction, we're just gonna put D, save time, direction, right? And location. What direction is the market currently going in right now? You need to know that. And secondly, and please make sure you're taking notes as we go through this training. The second aspect of market structure is what location do I want to enter the market? So let's go ahead and start off when it comes to trends. Now, I'm gonna keep the training on a basic level, a little bit, but I'm also I do these trainings with the assumption that you've already watched the course. So I'm not reteaching, basic things to people that have been here for a while, but I also do understand that people do join the course all the time. So there's always going to be literally every single week there's somebody new joining the course. So there's always going to be somebody new on the calls, right? So I keep that in mind. So I do keep things a little basic, but we are going to move fast. So certain things, especially if you're new, you may understand, you may not, but still take your notes and just try to follow along. So when we talk about direction, there's three directions that I like to categorize. And if the market is not fit in any one of these categories, then it's a question mark and we don't deal with those, right? So the market's either going up, down, or it's going sideways, right? And actually, let me just put a range rather than just sideways. So the market's either trending up, trending down, or it's playing one of these games where it's stuck in a range, right? So we have an uptrend, just kind of draw it out. We have a downtrend. Oh man, what did I just do? And we have a range. These are the three these are the three directions that you must identify. You must be able to identify, have confidence in your ability to identify. And when you open the chart, this is the first thing you're doing. You're trying to figure out what direction is the market currently going in. Now, how do we describe a trend? It's very simple. And the more, guys, the more simple you keep your trading, the easier it is going to be for you. If you make it complicated and you make the whole process too many steps, it's going to be, very difficult for you when you're trading on a regular basis. So if I was to define an uptrend, how would I define it? And you guys can join in, how would you define an uptrend in the least words possible? Just the easy part.
You like it's for the uptrend, the blue moving average is in the front.
Well, we're not talking about any strategy right now. We're talking about just strict market structure.
Oh,
Trade market structure,
higher highs and higher lows.
literally.
There you
That,
go.
that is it. That is all. With or without a strategy, you know what I'm saying? Like just pure market structure, talking higher highs and higher lows. Is this and is this all? So anything aside from this raises red flags. Some flags are worse than others, right? Some flags are worse. Some red flags are like emergency signs, and some are like warning signs. And we're gonna go through all that. But uptrend, we have higher highs and higher lows. That's all I want to see. Downtrend, somebody help me out with that while I finish typing this out.
Lower
Downtrend is,
highs, higher lows.
say it again.
Lower lows and lower highs.
There we go. Right. And um consolidation, which put P-O-C-O-N, consolidation is very simple. One more time for me, please. Equal highs and equal lows. All right. So your job when you enter the market, when you open the chart, is to identify if the market fits in one of these categories. And there's times where it won't. I'm telling you right now, there's times where it won't. And what do? You walk away. You just walk away. It's not, you're not jacking it. It is what it is. If you're a trend-based trader, this is the environment you want. You can trade consolidation if you're consolidation based, depending on your strategy. You want certain environments for certain strategies depending on the strategy you're trading. That is very, very important. So if you're trading the first day strategy, that is a trend-based strategy. Yes, the moving averages allow us to know the trend extremely fast without having to worry about high highs and high lows. However, that doesn't mean you completely neglect the simple fact that at the core of a trend is simply higher highs and higher lows. Now, the key thing in an uptrend, the key thing that there's two stages of a trend, right? You have that um when the market expands and then when it contracts. Then it expands and it contracts, right? So when we talk about an uptrend, these two phases, the higher high and the higher low, they play two different roles. And it's vice versa for a downtrend. And this is really key because a lot of people don't understand what's really going on. And if this clicks, you're gonna be able to see the market so much better, so much cleaner. So when we're talking about an uptrend, the higher high and the higher low point, the higher high is made when the market breaks structure. So like this, you had a high point before, and then the market broke that level and created a higher high. Now you don't know what that higher high is going to be until, of course, the market starts turning around a bit, and you're like, okay, cool, this is my higher high. Now, the higher high is super key because the higher high, think of a higher high like you getting a promotion at your job. You just reached a higher height in your career, right? So obviously you're doing very, very well. That is the most crucial thing you want to see in an uptrend is higher highs. I don't care how long the market has been doing uptrends before. Every time it makes a new higher high, that is the market you seeing with your eyes. Buyers are still in control. Buyers are still at play. That higher high is the key thing that you want to see in an uptrend. Just think of it as like a new bunch of, of liquidity just entered the market for the buyers. Everybody is pro buy, right? So really, you want to make sure you're identifying these. And if you're not if you could be in an uptrend and the market stops making higher highs, so that is letting you know that okay, well, this is slowing down a bit. And you may have a situation where the market is in an uptrend, right? Where the market is in an uptrend, and it comes and it makes a lower high. Now, a lower high is what I was saying is it's not a red flag, it's more like a yellow flag. Like, pay attention, right? Because again, the key things I want to see is a higher high. So if we break, eventually we could break. The market is just slowing down. But if we break again any one of these highs and we create higher highs, that is letting me know, yep, buyers are still in control. Keep looking for those buys, right? Now let's talk about the low points. The low point in an uptrend, this is the barrier. This is the point that should not be broken, right? So again, when we give that analogy of life, when you make higher highs, right? You got a new job. Okay, cool, right? There's times where, depending on where you are in life, everybody feels broke at a certain level. Some niggas can have two bands in their account and feel broke. Certain people can have $100 and feel like I'm outside. So we all have our higher highs and our higher lows, right? And every time you elevate, you have a new higher low. So before having $100, when we was young, oh yeah, we outside, we lit. Now you only have $1,000 to your name. I'm not going outside. I don't know about you, but I'm not going outside with $1,000 to my name. I'm not doing it. So every time you continue to make higher highs, you should make higher lows. Now, if I get to the point where I have less than 100, I mean less than 1,000, I have $500 to my name, and I want to go outside, I'm doing bad. That's a bad sign. You making less money than you was making before. So it's the same thing in the market. The market makes lower lows. That's a bad sign. You're not on the same projection you was before, right? Before, the highest point was, let's just make this a random number. We'll just say this is 5. And the lowest point, it became 3. And then the market went to 7. Okay. And then the lowest point here, maybe, let's just say 4 after this next pullback. And then it pushes up, let's just say to 8. The market must never come below 4. That's the lowest point. The moment it goes and makes a lower low, this is the first sign of a trend being over. This is the first sign telling you, especially if this low is what made a higher high, oh boy, the trend is over. The trend is clipped. This is what we like to call a transition. Transitions on the moment the market may be transitioning to a new trend and may start consolidating. This is the time where things are kind of confusing because I just had a higher high and I have a lower low. So you have to make sure you're very aware of your recent high and low points and making sure that everything is in alignment. If I'm in an uptrend, this is what I want to see. I want to see higher highs, and it doesn't have to, happen immediately. There could be slow times in the market, and but eventually it keeps pushing higher, right? This is what a healthy uptrend looks like. If you notice, I may have high and low sometimes. It's okay. That doesn't mean the trend is clipped. As long as I don't get low, no, look at all my lows. All my lows are either equal or they keep getting higher. That is the boundary. As long as we don't make a lower low, we're good. Please let me know if that clicks. Drop a 222 in the chat if that clicks. That is extremely important because that's how you know to get out the fucking trade. This could be long-term investing. This could be short-term investing. Let's say you buy Apple stock and your hope, for example, we can go to Apple stock. I literally just told you guys, I put it in the long-term investment chat to buy Apple stock and hold it for years, my God, hold it. But let's say you're buying Apple stock. Let's just look at the low. Every time the market makes a higher high, right? As long as the low does not get broken, the trend is going to stay. That is trend theory. So this helps you understand when to stay in trades and when to get out of trades. So if I'm looking at here, I'm looking at this low point. Okay, then we made a high point. We made a low point. But notice all my highs and my low points are getting higher. I'm just gonna focus on my low points real quick. Low point is getting higher, right? We made another high. Now notice this low is what went and created a higher high that broke this level. So this is what's holding the trend. Market pulls back, makes a low, and guess what? Keeps going higher. Once this broke structure, this is the barrier now. And I'm gonna just have this, and I'm gonna keep trailing this up as the trend continues. I'm gonna keep trailing this up, right? And you guys can just see, and mind you, this is years of time. We're talking about years at this point, and you're holding the trend because the market keeps making higher highs and higher lows. The moment you begin to see the market make higher highs and then break lows, that's the first sign that you might want to get out of there. So, for example, right, you can see the market made a higher low here, higher high, another higher low, a higher high, a higher low, and then a higher high. And then guess what? This low got broken. So this would have been the first sign. I'm like, oh man, it's time to get up out of here. It's time to get up out of here. The trend might be changing. Now, it doesn't mean we're in a downtrend because the downtrend is lower lows and lower highs. We need the series. We need it to happen a few times. So if I see this lower low, that's the first sign that it might be time to get up out of here, right? Get up out of there and wait for the market to begin to show its hand again. So now at that point, the market, instead of making another low low, what did it do? It started to break highs again. Started to break highs, started to make another higher high, another higher low. So I know, okay, cool. Like you can always get back in the trend. I just want to make sure that if I'm in a buy, the market is showing healthy uptrend characteristics. If I'm in a sell, the market is showing healthy sell trend characteristics. If it's doing anything outside of that, get the fuck out and wait for it to be healthy again, then get back in. It's honestly that simple. Your job is not to predict what the market's going to do next. Your job is to observe what is going on right now and execute based off that. So now, again, the market continues making high highs and high lows. So now, if we're looking at Apple stock, I mean, I don't know about you, but again, these lows are getting higher and higher and higher and higher. My lows are just keep getting higher, higher lows, higher lows. The uptrend is smooth sailing, right? So that's how you have to look at trends, and you have to be very observant of what's going on. That is my direction when I'm talking about the road, right? That is my direction in terms of where the market is going, right? So now when we talk about real quick, let's just go over what does it look like when the trend actually changed. Now I see a couple two two twos. If it didn't click, drop a 111. If what I just said didn't really make sense in terms of like understanding what how a trend should look for you to be in there, for you to be partaking in that activity, if that didn't click, drop a 111 real quick. And it'll help a lot so that, if we got to do a one-on-one, whatever the case may be, we could run that. All right, cool. So like everybody got it. Perfect. Let's keep pushing. So now how do I know if a trend actually flipped, right? So like I said, there's this transition period that we have in the market. And I'm gonna say this too. Rule of thumb, the market is messy. The market is very, it ain't pretty all the time. Sometimes you're gonna have certain times where the market, it comes to take a low like this, you get that lower low and pop right back up. Yeah. That's facts. And it's certain that's just them situations. It just is what it is. You're not gonna catch every move in the market. You don't have to, right? You don't have to. All you need to do is make sure that you're decently accurate, like dead ass. Like that is like if that's all like yeah, if you let go of I gotta catch every move and switch your mindset to I just want to execute perfectly, execute my strategy perfectly, you do phenomenal. You're gonna have certain weeks you don't trade. You're gonna have certain days like this past week. I ain't really call out a signal, yeah, because there was no clean firsty play. It is what it is. All right, on M5. So it's just like okay, but when there is a play, that accuracy is there. So just keep that in mind. The market will be a little messy sometimes, but these rules are very important. Don't let the mess of the chop of the market throw you off. If you're not able to categorize the market into higher highs and higher lows, or lower lows and lower highs with ease, leave it alone. So boom, let's talk about when is the trend actually changed. So trend theory, like I said, if the market continues to make higher highs and higher lows, it's going to do it forever, forever, until it does otherwise, which is makes a lower low. Now, the moment we get a lower low, That is the first step in a possible change of trend. Again, the market can easily choose to turn back around and continue making higher highs and continue buying. But if we make a lower low, again, when we describe a downtrend is a series of lower lows and lower highs. A series. So we need more than one. All right. The moment I see one first lower low, okay, cool. So we can check this off. I have a lower low so far. The market, it can come wherever it wants, as long as it doesn't make a higher high. Because if it makes a higher high, now we're talking about uptrend shit. We just need everything to be on the same page. The market can come here and make a lower high because my most previous high, I'm always focused on the most recent one. My most recent high is this. So as long as the market does not go above this, everything is looking like we're still going to be going down. So boom, let's say the market comes to this level and then begins to turn around. What does that mean? We just had a lower low because my current low is lower than my previous one. And we have a lower high now because my current high is lower than my previous high. So both is checked off. Just one time though, right? So what I personally require is the market makes one more lower low. It makes one more lower low. I'm like, oh yeah, downtrend time. I know we're in a downtrend because now we're talking about a series. Now I have more than one. Oh sorry, wrong spot. Right there. Lower low. I have two lower lows and I've had a lower high. I know, okay, the trend has officially changed. Now I'm for all sellers. So now my job is to be able to identify where my next lower high is going to be so I can sell at my lower high and make profit as the market makes a new lower low. That is what we're trying to do. Identify your direction. Once you identify the direction, if I know the market is making lower lows and lower highs, I want to enter at my I want to be able to enter at that lower high. If this is my so and let's just draw a downtrend real quick and just think about it. Like, what is the most profitable spot to possibly enter? It's obviously you're going to enter for those sales at these lower highs, right? So that's your goal. You're trying to identify where's my lower high going to be. And that's where we go into zones, support and resistance. So the first step, looking at the chart is direction. What direction is the chart going? Be confident. If you are shaky, because the market looks shaky and choppy, don't trade, bro. Just chill. When and mind you, you may miss the first leg of the trend. Cool. Trend theory, the trend is going to keep going forever until it changes its characteristics, until you get a change of characteristics, right? So once you are confident in, okay, yeah, I have a clean downtrend, my next job is to predict my where my next lower high is going to be so I can enter for those sales. So direction is covered. I just want to make sure everyone understands the purpose of direction, of trends, how to identify trends, right? Knowing what is a good trend, so I play, and knowing what is not a good trend, so I stay away. There's 10 people on this call right now, 10, 11 people. 10 people on this call, I need 10 responses. If you understand everything I just broke down in terms of direction and trend, drop a 111, drop some ones in the chat. If you are lost, matter of fact, scratch that. Just out of a 1 to a 10, just rate where you are in terms of understanding what I just broke down in terms of direction. If it clicks 100%, drop a 10. If not, drop a 1, just so I can get some context of exactly where we are. Lovely, 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 lovely. Extremely important. Some people send me their trade history, they buy, then they sold. I'm like, why the fuck? How did you buy and sell within 10 minutes? Didn't you have a trend? If the trend is, if the market's in an uptrend, I could look for a buy, be wrong, and look for another buy because I'm going to go with the trend. Cool, cool, cool. I need a couple more answers. Let's see where we at. We're going to be out of here like, I wanted to be 30 minutes. We started like 5 minutes late. We're going to be out of here like 10 minutes, y'all. So I ain't gonna take too much of your time, but this next part is very, very crucial. All right, cool. So we have direction. Like I was talking about that road, that street, right? Now you know, okay, these roads, in this mysterious country is just like back home, right? Everybody drives on the right-hand side and the left-hand side, it goes like this. So now you know the direction. So now, again, you need to turn into the road. How would you know? Through intersections. How do you know where your intersections are? It's based off where other people turn, right? So if you've seen somebody came here, right? Somebody came here and made a U-turn. Oh, wrong way. Somebody came here and made a U-turn, and somebody else came here and made a U-turn, and maybe somebody else came and just shot right through. You know that this area is interesting because people keep turning there. That must be an intersection. That must be a stop sign. That must be a place where people likely turn, right? Now, sneak peek with the same analogy into candlestick patterns. How do you know whether the market's going to turn or not? Turn signals, candlestick patterns, right? That's how you know whether the market's going to actually turn at that level. But we'll just stick with where we are today, market structure. I see people keep turning at this intersection. People keep turning at the stop sign. That's how I know there's a level there. So when you come to the chart, unfortunately, the chart is not like American roads where we have stop signs and you can see exactly what's going on. You have to be able to identify that for yourself. Where the market continuously turn around, right? Now, a lot of people get tripped up with this because there's so many levels. Like, bruh, I ain't gonna hold you. I could draw this level the market turn around, this level the market turn around, this level the market turn around, this level. There's so many levels on the chart that the market done turned around at. Well, guess what? Let's go back to the driving analogy. I don't know about y'all, but I know a lot of people that turn that sometimes they buck U-turns where they're not supposed to buck U-turns. It be like that, right? So how do I know which one is a correct intersection and which one is not? By consistent rejection of the area, right? So, for example, I could draw I could draw this level right here, right? I could draw this. I could be like, okay, cool. This, the market turn around right there. Okay, cool. But what happened the next time the market got to that level? Did it turn around? No, no. That's how we validate. We validate with history. Is there any other time where it rejected that level that you can see in this area? No. Well, I mean, we could look left and see if in the past it has, and in the past, yes, indeed it has, right? You can see the market rejected from here before in the past, right? So going back to the uptrend, if I know we're in an uptrend and I know this is the direction the market is going, I want to hop into the buys. The best place to do it is at my intersection. So if the market turned here before, when the market gets to the same level again, I can expect for it to turn back up, which it did. And it happens over and over and over. We could look at this level right here, right? The market has come to this level. Guess what? It came here, turned around. Came back here, turned around. I know I want to buy. So I want to buy off of these levels that the market has rejected from. So now that the market eventually pushed, and remember, in an uptrend, a break of a high is the best sign you could ever see. When it came back to touch it, it touched it and left. It came back to touch it and left. This is how you find the location that you buy. I'm not saying just because the market touched there, you buy. No. But this is how you predetermine where am I going to buy. As a trader, you're not supposed to wake up in the morning and just say, oh, let me just go buy. No, you're supposed to know what price you want to buy. Now think about the market as an auction, right? The, we're looking at an asset, which is US 30. On the right-hand side, you see all these prices. These are all prices. At the end of the day, you have to know, if you're a business owner, what price do I want to buy my product where I can sell it for profit? Just because I know that this is a profitable item don't mean I can just buy it anywhere. I have to find the right price or the right location at which to buy it so that when it shoots back up, I can sell it for profit. So if I'm looking at, and mind you, this is the weekly time frame, but it works on every time frame. Like that's just how the market operates. So now if I'm looking for a buy, I'm trying to identify where did the market reject before, right? So that I'm ready. So if the market ever pulls back here, I know this is where I want to look to buy from. So now, like I said, there's so many levels in the market. There's so many places where the market turns around. The biggest problem people have is how far back do I look to find my zones? Or how do I know if my zone is valid, right? And I'm gonna break this. And mind you, there's so many ways to find these zones. And there's so many right ways and so many wrong ways. For me, again, I like to keep everything very simple, and I find my zones the same way every time, right? It's extremely repetitive, which makes my life extremely easy. I wake up, I know exactly what direction it is based off the moving averages, based off the trend, and I know my zones based off these two rules. It's two rules. Number one, I'm gonna type it out, make my life a little easier. Number one, what level just got broken? This is my first location of interest. This is honestly my favorite, personally. My favorite place to look for any type of play. What level got broken? So what do I mean by that? In an uptrend, you have higher highs and higher lows. And every time the market makes a high, remember, that's the best thing in the world that you want to see. So the level that just got broken is the most important level that I care about. I don't care if the market shoots all the way up here, if it breaks like here. This is the level that matters to me. The level that just got broken is the level when the market pulls back to, this is where I'm looking to buy from. I ain't gonna hold you. There was a point in my trading career where I was having problems with zones, and I was like, okay, you know what? This is the only place I'm gonna. This is the only place I'm gonna trade from. This is the only. I don't care about no other zone. I don't care about this. I don't care about level before. Nothing. Whatever level just got broken is the only level I care about. And that's when I started to really see profitability. And it's not because this is the best zone in the world. It's because I found a consistent way to do it. And that's the most important thing. Find a consistent way to do it, and it's extremely effective. So if we look at these examples that we just gave about Apple, notice that's what these buys were, right? This was the level that just got broken. Let me grab my little arrow. This was the level that just got broken, and that's the level that the market bought from, right? We looked before. This was the level that just got broken. That's the level the market bought from. We can come to the 5 minute time frame, go to whatever time frame you want to go to. You could live however you want to live. Now, this is consolidation, so horrible example to show. Horrible example to show. But ultimately, same thing, right? When I'm looking at this downtrend, and for example, this is actually a great example right here. Let me delete all this and show you something. So as you guys can see here, at this point, the market was slightly in I guess you can call it an uptrend, or you're making higher highs and higher lows. So again, what level just got broken? Matter of fact, let's do it like just like that. What level just got broken? Bang. And in matter of fact, this level got broken. This level got broken too. These are all ceilings. So in my uptrend, I'm focused on my ceilings, right? The market made this high. It made this lower high, right? And then it finally broke it. So that level, let's go and see. When did it actually break it? What exact point did it break it? We have this first block, this first ceiling, right? The market rejected it here. It finally rejected here, right? This candle came. This candle is the one broken, the one that stuck its head out and closed. The body of the candle closed outside. That is the break. Then it came back to it. That is where you look to buy from. Guess what? If you really want to, you can mark this as a ceiling too, because the market rejected from here. I'm gonna just put a straight line so it doesn't overly like clog my chart up. Pause. Right? But this ceiling right here, again, the market broke, and this is the same level it came back to buy from. Like this is like you could make this your only zone rule, and you will kill it every time. This other ceiling right here, is really the same level. The market broke it, came back to it, and this is where it chose to buy from. Right? So I'm always focused on my ceilings. That's all I'm focused on. My ceilings in an uptrend. Right? The market came, made another ceiling, right? And again, you just have to, be very aware of what's going on, right? You see the market came here, rejected, came here, try to break it, came back in, came rejected, over and over. Finally broke free. It finally broke free, pulled back, try to push up, turn the fuck around. So there's gonna be a point, right? So let's say you bought here, you killed it. You bought here, you killed it. You could have bought here again, killed it. Right? Every time the market dipped into your ceiling, you could have killed them over and over. Right? You have four winners back to back. And then, the market comes, you expect the rejection again. If you're buying at the level, you're going to spank them. But if you're looking for an engulfing or something, this would have cooked you. So this one, let me just turn the color. It's counted as a loss, right? Counted as a loss. I like to show these because not everything is going to be a winner every time. But the key thing is I need accuracy. I need accuracy and consistency. And I need to be simple. So now that the market has done broke all these goddamn lows to hell, right? We know trend has changed. So now I'm focused on my floors. And the way I like to get my zones, I like to grab the wicks, right? So when I look at this low here, look at this low here, these little bottom wicks, that's what I like to grab. I like to grab those, get that little area, right? And as you can see, the market came, didn't break it. It was fighting in the zone. It's fighting for its life. I ain't gonna hold you, fighting, right? And eventually breaks. And when it finally does come back, again, just look what happens when it finally comes back. You get the goddamn sale. And if you really was nasty like that, this is how I really like. If you really wanted to get dirty, like this is another low. This is a low right here. The market broke the low, came back to the low. You could have sold from this low if you really had heart like that. It's all day. It's doing the same shit. If it's a downtrend, I'm focused on my floors. If it's an uptrend, I'm focused on my ceilings. Period. If that makes sense, 1 out of 10. Let me know where we at. Like, I ain't gonna hold you. We could really end it right there and you Gucci. Dear homies. 1 out of 10. Talk to me. Damn, I was thinking about, are we able to rewatch? Absolutely. This will be recorded. I was thinking about uploading on YouTube. I feel like I gave a lot of sauce. I don't know if I will, but it will be on the course. It definitely will be on the course. I might upload it to YouTube. I ain't gonna hold you. Give a nigga some free game. Lovely, lovely. I love it's clicking, bro. This is, you know what I'm saying? Like, this is automatic. The thing is with the course, I know that the course helps a lot, but hearing it over and over helps, and hearing different analogy helps. You know what I mean? That's why I love these Saturday calls, so we can really make sure we're getting nice with the skill. So yeah, I'm focused on my floors in the downtrend. I'm focused on my ceilings in the uptrend. Now, what's the second way that I find my zones? Real simple. I go a time frame up. So if I'm on the M, if I'm trading the M5, if you're trading, let's say you're trading off the 5 minute, I'm gonna look at the M15 to figure out where my zones are. And this makes your life so easy because like so for example, right? Looking at looking at this screen, we just remove all drawings. Looking at the screen on the M5, you're probably like, what the hell? Like, what's going on? You come to the M15, you can see much clearer, like, oh, I see, I see. We're just in consolidation. All right, we're just trapped up in this box. Equal highs, equal lows, just trapped up in this box, right? But on the M5, you're probably like, oh, wait, uptrend, downtrend, like you just all over the place, right? So going up a time frame helps tremendously. And this is the equation. If you don't know like what time frame to go up, this is the simple equation. Whatever your initial time frame is, right? So you have your primary time frame, and then you have your guide time frame, right? Your primary, and then your guide must be, I believe it's 3 to 4, is around 3 to 5 max, 3 to 5 times, right? So for example, if I'm on the 1 minute, that means your guide time frame is between the 3 minute two, but I would say definitely the 5 minute, right? If I'm on the hourly, you can go anywhere in that range. You just go look at the 4 hour time frame, right? If I'm on a daily, I'll look at the weekly, right? So that's anywhere between this 3 to 5x is what you want to look at to see a cleaner view of what's going on. And I actually urge you to do that, period. Do that anyway. You don't want to go too high though, because you don't want to be sitting here on an H1 too like, I mean, you could. I'm gonna be wrong. If you train in 1 hour, you could go to H1. It gives you some context, but a lot of people, especially when they're beginners, they get like overwhelmed with all the data. They don't really know how to like put it together and interpret it. But so that's why I was just like, if you just stick to one time frame higher, um, that's gonna help you a lot with your zones. For me. So that is really it. right? Again, going to the analogy real quick. We already broke down how do I know which side of the road they drive on, right? It's based off higher highs and higher lows. How do I know where to enter the market? It's based off intersections. Well, again, how do I know intersections? That's based off the place the market rejected before. And even simpler, the level that just got broken. The level that if you're struggling, only do that. The level that just got broken. After that, you can begin to get fancy with it a little bit. You feel me? And you'll be able to start identifying other zones and do your thing. But if you want a payout, you need consistency. That's what's holding you back. You need consistency. This is another example. We have a low here. The low gets broken. The market eventually comes back to the low. And what happens when it gets to the low? It fucking sells. It's so simple, guys. You feel me? So yeah, that's pretty much it. Any questions? Any questions? Speak now, forever hold your peace. Talk to me. Going once, going twice, going thrice. Um, cool. Now I love this. If you feel like you gained some value today, just go ahead and drop a BTM in the chat real quick. Let me just see where we at. If you feel like you gained some type of value today, you definitely don't want to miss these Saturday trainings, man. I ain't gonna hold you. I leave it all on the line on these trainings. If you feel like you got some value today, G was God. What was that? What's that? G is the guide time frame. So if I'm trading the 1 hour time frame, I want to make sure that let me go back to that. Dang, hold off on the BTMs real quick. I need it for the content, cuh. But let me go back to the example I was given. So, dang, hold off on the BTM. Hold up. Damn, I need it for the content. God, killing me. Wait, fuck. Okay, let me show you again, my boy. So we got primary, right? Primary time frame, and then you have your guide time frame. So your primary time frame is the time frame you actually enter trades on. So let's say you trade off the M15, right? If I trade off the M15, that's the like I'm looking for whatever confirmation on that time frame. I need my guide time frame to be about 3 to 5 times the size of my primary. So if I'm looking at the M15, you know, four right in the middle. 4 times 15 is 1 hour, right? So I'm gonna look at the 1 hour time frame. If I'm trading the 1 hour time frame, right, I would look for I need to make sure number one, my trends. So if I'm trading the H1 and I'm looking for a buy, I want to make sure my H4 trend is also in alignment with that, right? I want to make sure my H4 zone is in alignment with that. So this is definitely just to make sure you're not sitting in chop because sometimes you may see like let's say you're trading the 1 minute, you're like, oh yeah, I see a beautiful trend, and then you go to the 5 minute, you're like, wait, I'm sitting in the middle of consolidation. This is a trap. You know what I mean? So it just allows you to really see the bigger picture and know exactly what's going on. Any other questions? Lovely. All right, now let's get the content going. Cuz if you feel like you got some value, talk to me. Drop a BTM in the chat. Drop a BTM in the chat. Talk to me. Um, yes, sir. Yes, sir. Yes, sir. If you feel like you got some value, just go ahead and drop a BTM in the chat every Saturday, man. Put that. Make sure everybody getting value. Go ahead and drop them BTMs. I'm loving it. I'm loving it. Yeah, I love it. Everybody got some value today before the millions, man. If you got some value, drop a BTM. Drop a BTM before the millions. We're not playing, man. Everybody is going to be rich. Every Saturday, we're going to be here. We're going to learn. We're going to stay sharp, stay on the charts, do our thing, man. Enjoy y'all day. I'm going to catch y'all next Saturday. I'm going to catch y'all Tuesday, actually, live trading session. So make sure you're there. Everybody, all right, y'all. And this will be recorded. I'm uploading on my YouTube too. I'm uploading on YouTube so y'all can go ahead and you know what I'm saying, rewatch that if you please. Saturday, we're gonna be here. All right, y'all.